안녕하세요. 미국주식 롯데하기 미준입니다. Today we have a very special guest visiting us. It is my great pleasure to introduce Mr. Stephen Cress, the head of quantitative strategies of Shiking Hi, Steve. How are you?
I'm very well. Thank you so much for having me on your show today. I truly
Welcome to my
appreciate it.
YouTube channel. And thank you so much for sparing your valuable time for me and the audience on my channel. I'm really excited to host today's interview with you. I have to say the timing is perfect because just to let you know, there are around 400 new subscribers who have just joined Seeking Alpha Premium membership only from last 1 month. Um,
Wonderful.
because we are running a $99 promotion. So today, I'm very confident that our meeting will be a fantastic opportunity for the new members as well as the potential members for the future.
Well, I'm so glad to hear that. Thank you for informing me of that. Even though I work at Seeking Alpha, I'm very busy with my analysis, so sometimes I'm not even aware, and I'm glad to hear that we have that promotion. I think it will be useful to many individuals.
Absolutely. Before we talk about Seeking Alpha, please can you introduce yourself to the audience?
Yes, thank you. Well, again, my name is Stephen Cress, and I have over 30 years of experience in the financial industry. I had my start in the industry as a research analyst, and I studied the fundamentals of companies for many years. I worked at what was Wells Fargo, and when I was there, I was ranked the #1 analyst. After Wells Fargo, I spent the majority of my career working at Morgan Stanley, where I ran a proprietary trading desk in quantitative strategies. And I got a real taste for running money when I was running that prop trading desk. So I decided to go to the asset management side, and I worked at Northern Trust for a number of years, which was at the time the 14th largest asset manager in the world. And then I decided to start my own hedge fund. And the hedge fund was based in quantitative strategies. I actually ran it out of London. I invested in stocks all over the world. And I lived in London for about 11 years. I'm back in the New York area now. But when I was running my hedge fund in quantitative strategies, I was very intrigued with trying to get quantitative modeling into the hands of everyday individuals. And for most individuals, when they think about the large hedge funds that run quantitative strategies, it's a big black box of unknown information. And I took it upon myself to develop a very user-friendly experience. And I created, in essence, what was a robo-analyst. So individuals could go to a platform, put the name of a company in, and get an immediate opinion off of data that gets refreshed every single day. And I was running that simultaneously with a hedge fund. And eventually my interest was more in the fintech company than the hedge fund, and I started to do it full time. And I was able to develop a website and a platform. And when I was running it and we got it up and going, I felt that we needed a strategic partner to help introduce the robo analyst to the rest of the world. And I came across an old colleague, David Jackson, who you know quite well, who was the founder of Seeking Alpha. And when I showed him what I was doing, we both instantly believed that incorporating the quant robo analyst platform onto Seeking Alpha's platform would be a terrific marriage. And in essence, it would provide any individual with information where they could get an opinion from an expert or contributor and see an article or in-depth research report. And simultaneously, they could get the fundamental valuation framework summed up to them through the quantitative aspect. And the great thing about the quantitative aspect is we run through the numbers every single day, and we issue a fresh directional recommendation every single day based on the company's financial metrics and ratios. And when you put the two together, it's a wonderful user experience, as I'll show you on the page. You could immediately see a written story or article from a contributor as well as the quantitative assessment. So I was able to take my career in quantitative analysis and trading, and I funneled it into basically an arena that I feel has a much greater value to individuals. And I believe through Seeking Alpha that we provide a resource to individuals which helps them make informed investment decisions in a very user-friendly manner and a very quick manner as well. Mm-hmm. So I'm thrilled that you have me on your show today, and I welcome the opportunity to showcase our platform.
What a great story, because I was always thinking that Seeking Alpha is the only platforms where you can learn about a story of the company as well as the fundamental analysis in the same platform, because the other platforms do not really have both functionalities. So I can now see how it was born, right? So initially, Seeking Alpha didn't have a fundamental analysis then, before the Seeking Alpha met you.
That's right. And now in one place, you have news, you have contributors writing articles, and you can get a number of different opinions on any one company, and you have the quantitative analysis all in one place. It's sort of a trifecta of information, and it's a real win for any individual, I believe, that uses the platform who's interested in investing.
Certainly. Some of our audience might not be very familiar with the concept of quantitative strategies. Could you please explain what is quant and then how we can utilize that?
Absolutely. Quant is really just the process of using the power of computers to help assess the fundamentals of a company. As a research analyst, I would typically start by analyzing one company. I would read the annual report. I would go through the balance sheet, the cash flow statement, the income statement, and I would write up various aspects on each of those financial metrics for a company. And I would try to also research other companies in the same sector so I could make a comparison. And it was a very labor-intensive process to do that as an analyst. And to this day, really for the better part, of several hundred years, since stock markets have been around, there have been analysts, and they still use these same conventional methods for analyzing a company. What we do through quantitative analysis is we load up all the data from companies. So for each individual company, we load up their balance sheets, their income statements, their cash flow, and we also load up valuation metrics and growth metrics and profitability metrics. And what we do through the power of computers is we score all those metrics. And in essence, the quantitative analysis is the same thing as fundamental analysis, but the computer gives you the ability to assess 6,000 stocks at one time, as opposed to just one company at a time. And through the ability to sort and filter, we can see what stocks are the strongest and what stocks are the weakest. So as an analyst, it was really, I don't want to call myself lazy, but I knew that there had to be a better way to analyze companies than one annual report at a time, and going through one stock at a time. And really, an analyst on Wall Street, the most that they could cover in terms of like companies within their sector could be maybe 10, 15. If you're a really experienced analyst and you've been doing it a long time, maybe you can cover 20 companies. Through quantitative analysis, as an individual, you have your fingers can type in any stock and you can get an immediately assessment of what that company looks like. And that's through quantitative analysis that it delivers that power. So it's really the same thing as fundamental investment research, but it's just using computers to assess thousands and thousands of companies and compare those companies to each other at one time.
I think you should feel very proud of what you have achieved, because only 10 years ago, maybe the information and data was money. And there was a huge gap between professional investors and retail investors because of that information, right? So now your tool is providing the equality in terms of the investment decision process.
Thank you. I truly appreciate that, and I believe, that is a really good assessment. I mean, to this day, as an institutional investor, if you want information, you'll go to Bloomberg and you'll spend $27,000 for a license to their terminal. Or if you're going to FactSet or Reuters, who are the other big data vendors, you're spending thousands and thousands of dollars as well. And for now $99 per year, we provide you with the same information, but with a much better user experience. It's actually a much easier platform to use than the platforms provided from the traditional data vendors. And I know because I've been using those data vendors for the better part of 30 years. And really something that David Jackson and I believe incredibly important to the experience is to make it user-friendly for the individual to get that information. And you will not find that on those much more expensive platforms. So it's not only coming at an inexpensive price, we put a lot of time and resources into making sure that it's a really user-friendly experience for individuals as well.
Yes, I absolutely agree that the Sikking알파 platform is very user-friendly. But we have lots of new members who just joined. So could you please go through the main tools we can utilize from the platform by maybe sharing the screen?
It's about 9:30 in the morning here in the New York area. And this is a good time to showcase the platform because I could give you an example of what I, as an individual and an experienced investor, what I do first thing in the morning. And typically first thing in the morning, I go to this dashboard. And this dashboard provides me with a view on the futures market of how the Dow Jones is trading, how the S&P is trading, and the NASDAQ. And I can see the picture right now looks like pre-market open, that the market's most likely going to open down. Not as heavy as it has been the last couple of days, but down. And when I want to know why the market's going to be down, I just look to the latest news, which is on the right-hand side. And that can give me a view for stories for the overall market or specific companies where information is coming out. And as I scroll down, one of the features that I really like is we'll show 3 very important articles for the day. This is a relatively new feature. Some people don't want to go through all the stories. They just want to know what the most 3 important are. And we put the 3 top stories, and you'll find those here. And actually, one of these is an article that I wrote, which has a very interesting title, How Strips and Tips Made a Bad Year Worse. I think there is a misnomer out there that if you invest in the inflation-oriented bonds, you protected yourself this year. But what the article highlights is that these ETFs that focus in tips and strips actually did not perform that well. So the article shares with you how we found that out. And we were able to decipher through one of our ETF screeners by looking at what's working and what's not working. And we found that these fixed income vehicles were actually not working that well this year. So I brought that to the attention of our readers. The remainder of the dashboard, you could see these show the articles from our contributors that are trending and are the most viewed by our audience. And on the right-hand side are the news stories of the day that are trending. And again, these are the most viewed news stories. So it's really a great way of bringing what's most important in the eyes of investors. And as you scroll down, there are many, many more stories. So you can see all analysis. And this would be all the contributor articles that are written on the day or all the news stories. You can scroll down and it's customized. And this is a portfolio that I have called Alpha Picks. And I'll tell you a little bit about that. But I have a lot of different portfolios. So I could choose any one of these. I have portfolios that are focused on China ADRs or clean energy baskets, drone baskets, lots of ETFs, Europe, industrial baskets. So we have a great portfolio tool where you could load up your portfolio or just create different portfolios that you might be interested in looking at. And what's really nice about this tool is you'll see the headlines, and these headlines are relevant to whatever is in the portfolio. So there's a lot more when you scroll down, and users will be able to see that. Here's another article that I've written, and I couldn't have planned it any better. I do write a number of articles. I try to write about 3 articles a week, and they are very popular. And I wasn't planning on this being the top story, but it's right there. And as we scroll down, this is a screen that we have, which shows our top rated stocks. And these are the top rated by the quantitative system that we use, as well as our Seeking Alpha authors and Wall Street ratings. And this is something I call the triple win. Whenever you can find a stock that has a buy recommendation from Quant and our contributors and Wall Street, which are 3 independent research systems, that's a real win. So you know that these stocks are getting strong validation from 3 different sources. What I would like to do is, if I went to, say, top stocks, I'm going to show you how I do that. So if I was looking for an idea, there are a number of ways that we could do it. So if you go to top stocks, we'll show that screen that I just showed, which was top rated. But if you're interested in dividends, we have top rated dividend stocks. If you're a growth investor, you can click on top growth stocks or top stocks by Quant, which I appreciate since I developed that system. So I'm going to click on that. And what we do is you can see that there are 4,678 securities that we have ranked, each and every one of them. And as you scroll down, you can see the stocks that are at the very top of the system. And outside of the Quant score, you can see the other metrics that we score. So we look at valuation, growth, profitability, momentum, and EPS revisions, which is something unique that we do at Seeking Alpha. EPS revisions is actually looking at the number of professional analysts that move their earnings estimates up or down. So this is actually the number of estimates that are revised up or down. It's a very unique feature that we look at, but I have found historically it's highly predictive in the movement of a stock price. So I find it very interesting at times when analysts on Wall Street could have a strong buy in a stock, but they're actually revising their numbers down. So that's one thing that tells me that analysts on Wall Street don't always tell the story like it is. Sometimes due to investment banking or due to having a good relationship with the company, they don't want to put a poor rating on it. So they'll keep their rating, but they know that the company's actually not going to do that well, and they'll start revising their estimates down.
I see.
Conversely, we find if they're really excited about a company's prospects, that they'll keep revising their estimates up. So we look at that as well as a number of these other features. And what I'm going to do is I'm going to take a look at a stock like Exxon Mobil. It's ranked number 4. It has a fairly good dividend. I know energy is a sector that has been highly favorable lately. So I'm going to click on Exxon Mobil. And this is going to bring me to the stock page. So I could see a chart. And as you can see, it has strong ratings from the Seeking Alpha authors, from Wall Street, and from Quant. It's a strong buy. And we've had a strong buy in this stock for probably more than a year. And you can see the stock is up about 76% over the last year. Year to date, the stock is up about 51%. So it's been a great Quant recommendation. And as you can see, if you look at the right-hand rail, you'll see the factor grades. And every day this is refreshed by Quant. So we reassess the valuation of the company's growth or profitability, the momentum of the stock. And all these grades are sector relative. So we're not just giving the company a C- on valuation. What we're doing is we're comparing Exxon to all the other energy stocks from a valuation perspective or a growth perspective or profitability. And what you could do, we make this system very, very transparent. So you could just click on profitability, and you'll see all the underlying grades that make up that profitability grade. So we look at gross profit margins, EBIT margins, return on equity, return on assets, cash from operations, net income from employee, and we grade each one of these metrics. And in addition to the grade, as I said, it's sector relative, we will show you the absolute metric. And earlier in our conversation, I mentioned companies like Bloomberg and Reuters that are data vendors for large institutions. What I find truly amazing is you could go to those platforms and you'll get this absolute data, but they don't interpret the data like we do at Seeking Alpha. So the benefit of seeing these grades is it provides you with an instant characterization of that financial metric is strong or weak. Where you go to the other data vendors, you'll just see the data, and after a while, it becomes like white noise. You're just looking at data, and it's really hard to decipher what's strong or what's weak. And one of the wonderful things that we do at Seeking Alpha is provide that grade so you can instantly see if it's strong or weak. And by doing an A+, which is the best grade, or an F, which is the worst grade, it provides you with that visual so you know how strong or how weak it is versus the sector. And you could do this on growth as well. So overall, Exxon has a C for growth. It's pretty amazing that year over year, their revenues grew at 64%, and it just gets a C+. The sector is doing amazing. The sector year over year growth is 70%. That's almost unheard of for any industry, the entire sector to be doing so well. But as you look at our top stocks on our model, many of them are energy companies. And we've had a focus on energy stocks for the better part of a year and a half. And one of the wonderful things that the model does, we look for companies that are collectively strong on value, on growth, and profitability. And before the stock prices started to move, the system recognized that the energy stocks had very, very strong growth and there were excellent values. And what I want to do is I want to show you the performance of our strong buys going back 12 years. So what we have here is a graph that shows the performance for only our strong buy recommendations, but it's all the strong buys. It's not me cherry picking just a couple of stocks. We try to be very transparent in what we're doing. And what we're showcasing here is every day, every year, all the strong buys that we've had going back to 2010. And we've compared our performance to the S&P 500. And as you can see, on an investment that started as $10,000 over 12 years, if you put $10,000 into the S&P 500, your return would have been $34,000. If you had put it into our strong buys, your return would have been $174,000. So the system has done a far better job selecting securities than just buying the overall market. And up until this year, you'll also see if you hover over the years, you can see what the performance was each year for the strong buys. And some years we significantly outperform the market, and other years just slightly. Almost actually every year we have been positive, but this year we're slightly negative. Our strong buys are down 5.8%, but the S&P is down 16%. So even in a down year, we're still significantly outperforming the S&P. And honestly, a lot of our stocks have dividends and yields. So the performance would actually be a little bit better if you added back the dividends. It's really, the returns have been incredible. I'd like to show you, if you were interested in developing your own screen, you could just simply go to Top Stocks and you go to Stock Rate Screener, you click on that, and you actually have the ability. Now, we have a lot of screens that we do for people. So you could go to top rated stocks or top yield monsters or top growth companies. We also do it by sector. So if you're interested in energy, you could just go to top energy stocks, top technology, top healthcare. So any sector that maybe your viewers might be watching Jim Cramer from CNBC, and he might be mentioning that he likes a certain sector. He likes utilities, or he likes consumer staples or healthcare. You can simply go over here and just click on it, and we immediately show you our top-ranked healthcare stocks. So we make it very easy to identify stocks within certain sectors. And we even make it easy to find companies within industries as well, which are sort of subsectors. But if I click on this company here, for example, this is a pharmaceutical company. And if I scroll down, you can actually see where the company ranks in the sector. It's number 10 out of 1,174. But in its industry, it actually ranks 4 out of 224. Yeah. So say you happen to own Area Pharmaceutical and you like it, they've been doing well, but you want to find the number 1 company in the healthcare sector. All you would have to do is click on healthcare, and we immediately show you which is the number 1 company based on our system. Charles, let me see if you have any questions right now.
Yes, actually the questions are from our subscribers. I asked my subscribers to submit some questions for you. And then one of the questions was about quant performance, because the quant performance is based on the 5 different areas of analysis. And based on those 5, we will get the quant score. But out of 5 factors, for example, growth, and also the profitability, they are based on historical data, not for the future. But is it still okay to make an investment decision based on history, not for the future? Well, what is your opinion about it?
Actually, Charles, we look at historical data and we look at forward data as well. So we are looking at both. I will show you. I'll go to Exxon Mobil as an example, and I'll click on growth.
Yep.
And you see here, we're looking at history. It says year over year, but over here, this is forward growth. And as you hover over it, it gives you the definition of forward growth. So we actually use a blended growth rate where we're looking at 1 historical year, but we actually go 2 years forward. And the way that we go 2 years forward is that we collect the estimates from Wall Street analysts. So we look at Wall Street analysts' revenue estimates, earnings estimates, EBIT estimates. So there are a lot of estimates out there. We have, as you may recall, that EPS revision grade. That EPS revision grade is all looking forward. So we're looking at analysts revising their estimates up or down. So we have a very detailed system where we're looking at a number of growth factors, being revenue, EBITDA, EBIT, earnings per share. We're using forward estimates. So our system combines both forward-looking estimates as well as historical data.
Another question I received from my subscribers were different those 5 factors: valuation, growth, profitability, momentum, and revisions. Which of those 5 are most important factors? Do you have a different weights on these grades?
I have to say, you have some very smart followers. Great questions. And yes, in fact, some factors do work better than others. So we run tests, and we call them back tests. And we look at hundreds and hundreds of factors, maybe close to like 1,000 different financial metrics. And we go back over a 12-year period, and we try to determine which of the metrics out of those 1,000 metrics has the greatest predictability. And as we select the metrics that we use in our model, the ones that have the greatest predictability have the highest weights. So when you're looking at our model and you see that there's valuation, growth, profitability, momentum, revisions, the best factor, and actually this goes back 200 years, the best factor, believe it or not, is momentum. And I'll click on that. And this factor has the highest degree of predictability for future stock price. And when we look at momentum, we look at 3-month momentum, 6-month momentum, 9-month momentum, and 1-year momentum. And we have a blend of those. Each of those in its own right is a different factor because it's a different time period. And we sort of have a blend of weights for those momentum factors. So momentum is the most important. Growth is also very important.
Mm-hmm.
And as you can see, we have a lot of different metrics here. And some of these metrics have a higher weight than others. And then we roll those scores up into the overall growth grade. That's why sometimes people will say to me, how can you have like all this green for the underlying metrics, and then the overall metric is C, coming through as a yellow color. And the reason why is revenue growth here and CapEx growth and dividend growth, not the dividend itself, but actually dividend growth, okay? That's how fast the company is increasing their dividend rate. These are very important growth metrics, more so than some of the ones that are in green. So they have a higher weight, and that impacts the overall grade for a company. So to answer your viewers' question, yes, metrics do have different weights.
And the most important factors are momentum, and second one is it growth?
It's momentum and it's growth. But I will tell you something we do in the model is to prevent having a model that's too focused on momentum and growth. I have found that you need to have balance. And that's why when we identify these stocks and we rank them looking at those 5 characteristics of valuation, growth, profitability, momentum, and revisions. And to make sure that the model is not too momentum oriented, because momentum is not always going to work. And growth is not always going to work. And as you might be aware, over the last year, value investing has been better than growth investing. And we want to protect investors. So that's why we're looking for companies that score well collectively on these combined traits. So even though momentum and growth might have a higher weight, we also place, a strong weight on valuation as well. So it's not completely equal weight, but each of these plays an important factor. I would have to say the 2 most important, though, are momentum and revisions.
I see, momentum and revisions. Another one I would like to ask is, when we see the buy or strong buy rating from the quant, okay, so let's say we follow the recommendation and bought the stock. What would be the investment period, time frame? Is it are we buying for 1 month or 1 year or 6 months? What kind of the investment period are we expecting when we buy a stock based on quant?
That's an excellent question, and the honest answer is that it's hard to put a specific time period on how long you can own a stock, because as you're well aware, stocks trade every single day. And on any given day, there could be a news event that comes out and a stock could be up 5%, 10%, 20%. And maybe if it goes up 20% in one day, it's not a good value anymore because the stock has appreciated so much. So if I had a stock that went up 20 or 30% in one day and the valuation grade went from A to D, that's no longer a good value. And that can happen in the course of one day. So it's hard, since stocks trade every single day and, they trade hundreds, if not thousands of times a day, depending on how large the stock is, it's hard to put a specific time period on it. That's why it's very important for people who have a portfolio. And if you are a user at Seeking Alpha, you get an email on your portfolio every day. So if there's a big change in any of those grades, you will get notified of that change and it will bring it to your attention.